Interest rates have to go back up. We have to quit printing so much money, and we have to fight this raging fire called inflation. Now let's talk quickly about the economy in 2022 and how that impacts all real estate and all businesses in general. All right, so as I'm sure you're aware, we just went through this little thing that will go down in the history books called and during that time period, our Federal Reserve, the United States Federal Reserve, led by Chairman Jerome Powell, decided that they were going to cut interest rates all the way to zero. They were going to print trillions on trillions of dollars to save the American economy from crashing. We're 2 years into this thing now, and they have told us that the plan going forward is that they've got to get us back to normal. Interest rates have to go back up. We have to quit printing so much money, and we have to fight this raging fire called inflation. Not only is inflation coming, inflation is here, and we need to do something about it. And the way you fight inflation is to make money more expensive. And so what that means is that a higher interest rate means money is more expensive. Why does that fight inflation? If money is more expensive, opportunities go away. If I want to go borrow $1 million at 3%, my cost of that money is $30,000 a year. That is my cost of that money. That means that if I have a project that can generate $40,000 a year, then that is going to be a net positive return, and I will net profit $10,000. That is the spread of that money, okay?
The Federal Reserve signaled today that it may raise interest rates at least 3 times in 2022, hoping to ease the staggering inflation that has Americans paying more for just about everything.
But what happens when interest rates go from 3 to 4%? Well, guess what? That same opportunity that was $1 million is no longer an opportunity, because I can pursue it, I can do everything right, but I won't make any money. And so that opportunity goes away. Now me as the buyer, I'm no longer willing to buy that $1 million project from whoever's selling it, and that money is not going to trade hands. Now, if money did trade hands, then the seller gets that $1 million, they go spend money in other places, and the money just churns, and the cycle continues. So when money is cheap, people take on more projects than really they should. Money has been cheap. That means that more people are taking on projects than they should. Money is moving, and people are willing to pay more for things because the money makes sense. And so the way you fight inflation is you raise the cost of money, and people will quit spending money so fast, and that'll bring the prices back down, right? So essentially what will happen on that first example, the deal that makes $40,000, I'll pay less for that deal, and then my interest cost will drop. And so eventually that cost will come back down. It won't be inflated, and the cycle revolves, and inflation does not happen, or it happens at a slower pace. That's what happens when you raise interest rates, okay? And so the Federal Reserve has told us they intend to raise interest rates 3 times in 2022, okay? Now, what do they mean whenever they say that they're gonna raise interest rates? Well, I want you to take a look at this chart right here. This is called the federal funds effective rate, okay? And so what we're looking at right now is we're looking at a 5-year view of the federal funds rate. And so we can see that right now, you know, on the right-hand side of this, it's pretty much at 0, okay? The federal funds effective rate, what this is this is the amount of money this is the interest rate that the Federal Reserve charges banks. So the way the banking system works is the Federal Reserve creates money, and then they give it to different banks. Whatever bank you go to get a loan, they lend that money to your bank. That bank doesn't just create money and have all the money. The Federal Reserve gives money to that bank. Then that bank has to turn around and pay the Federal Reserve an interest rate. That's what the federal funds rate is. And so that rate right now is at an all-time 0. Whenever the Federal Reserve talks about raising interest rates, they're going to raise the federal funds effective rate. They're going to raise the rate at which they lend money to banks that you go to get a loan. And then in turn, those banks receive money from the Federal Reserve, they turn around and they lend it to you at a higher price. And so that's what the Wall Street Journal prime rate is. Essentially, we'll call it prime, okay? And so I included a link to both this chart we looked at and a link where you can go view the prime rate. But generally, the prime rate is going to be about 3% higher than the federal funds rate, okay? And so whenever the Federal Reserve talks about raising interest rates, they're going to raise the federal funds rate. As the federal funds rate goes up, the prime rate will also go up, increasing the cost to us, the end borrowers, okay? And so they have to do this to fight inflation. They have to raise rates on us. They have to raise rates, because if they don't raise rates, then inflation will keep going. But here's the thing, if inflation keeps going, that's really bad for us, but it'll also be really bad for everybody if the federal fund rates go up, because the government and all the bonds and all the money that we've borrowed because of COVID, we pay interest rates based off of that. Okay, and so if the rate at which all of us borrow money and the federal fund rates go up, then what's going to happen? The interest cost to our government is also going to increase. And so we're going to see a really, really interesting dichotomy play out, right? A balance between two different opposing things, because on one hand, they have to raise rates to fight inflation. But if they do, then our economy could start slowing down. And our economy, despite what everybody's saying, despite what the stock market looks like, is not that strong right now, okay? And so 2022 is going to be an interesting year, because what I think is going to happen is I think that they're going to try to increase rates. They might increase rates 1 or 2 times. I think a new variant will come out. I think something will happen. And I think that we will not raise interest rates 3 times in 2022. I think we might do 1, maybe 2 rate raises, and then level off, no more rate raises, or even drop back down. So with that being said, I do think rates will go up. I don't think they're going to go up significantly enough to say, hey, we're not going to borrow money. And I think that still at the end of 2022, we're still going to be well below what interest rates have always been. What I think is going to be very interesting to watch as a real estate investor is, will they stick to their word? Will they raise it 3 times? And what if they do raise it, how much will they actually raise it by? Guys, with that being said, guys and girls, with that being said, if you're wanting to be a real estate investor in 2022, I think it's the right move to do. I think with inflation, I don't think inflation is going to go away by any means. I think if you have any money, you need to get your money working in productive real assets. Productive, meaning cash flowing, tax protecting, all of those good things, and real meaning something you can touch, something that's fundamental, intrinsic value does not change just because, because inflation happens, right? Like my house that I'm in right now, it's a certain number of square feet. If inflation happens, it's still a certain number of square feet. It protects the rain from getting on me. If inflation goes up, I still don't get rained on when it rains. And so that's what real assets are. So I think that real estates are a great play. I think that businesses are a great play. You want inflation hedges. You want to still borrow money, at super low cost. And that's what being a real estate investor in 2022 is going to be all about. So I hope you like this. If you guys haven't, read my book, Skip the Flip. It's going to help you out a lot on your journey. Subscribe to the channel if you like my videos, if you want to learn more about the ins and outs, the nitty gritty of being a real estate investor. That's what we're talking about here every single week. So hope you enjoyed this. Drop me a like, subscribe to the channel, and I'll see you next time. Be great.